Let me start with something most people don't realize. AI is already making decisions inside banks, not experimental decisions, not future roadmap decisions, real ones. Decisions about who gets approved, who gets flagged, who gets investigated, and in some cases, who gets excluded. And the uncomfortable truth is this: most customers and many professionals inside banks have no idea where AI is involved, how much influence it has, or who is ultimately accountable for its outcomes. That's what I want to unpack in this session. Not the hype around AI, not the vendor promises, but the ethical tensions that appear when automated systems start shaping financial access, risk outcomes, and customer treatment. Because in banking, ethics isn't theoretical. It shows up in credit decisions, fraud outcomes, complaints, regulatory scrutiny, and reputational risk. Before we go any further, we need to ground this conversation. When people hear AI in banking, they often imagine autonomous systems, self-learning machines, decisions happening without human involvement. That's rarely the reality. In most banks today, AI and machine learning are used to prioritize cases, score risk, flag anomalies, route decisions, and accelerate workflows. These systems don't replace humans, but they absolutely shape what humans see, focus on, and act on. And that's where the ethical tensions begin. Before we go any further, we need to ground this conversation, understand what AI actually means in banking. When people hear AI in banking, they often imagine autonomous systems, self-learning machines, decisions happening without human involvement. That's rarely the reality. In most banks today, AI and machine learning are used to prioritize cases, score risk, flag anomalies, route decisions, and accelerate workflows. These systems don't replace humans, but they absolutely shape what humans see, focus on, and act on. And that's where the ethical tension begins, because influence matters. Even if a human technically makes the final call, the system that decides what gets surfaced up still shapes the outcome. What are the four core ethical tensions? Bias without intent, explainability versus performance, automation drift, and accountability and governance. The first ethical challenge is bias without intent, and that's where people often misunderstand the problem. Banks don't design AI systems to discriminate, but AI systems learn from historical data, and historical data reflects past decisions, past policies, past risk appetites, and past exclusions. So if certain customer groups were historically treated more cautiously, even for valid reasons at the time, the model may learn that pattern and reinforce it. No malicious intent, no explicit rule, just correlation. This creates a serious ethical question. If a model produces outcomes that are statistically defensible but socially problematic, is that acceptable? And more importantly, who is responsible for correcting it? The model, the data science team, the business owner, or the fintech or bank? In regulated environments, the model did it is never an acceptable answer. The second ethical dilemma is explainability versus performance. In banking, decisions need to be explainable. There can't be any black boxes. So to regulators, to customers, to internal risk teams, you need to be able to explain how decisions were made. But the most powerful models are often the least transparent. So banks and fintech face a trade-off. Use simpler models that can be explained, or use more complex models that perform better but are harder to interpret. This isn't just a technical decision. It's an ethical one. Because if a customer asks, why was I declined for a credit card, or why was I investigated for fraud, the bank needs a defensible, human, understandable answer. Opacity erodes trust. And in banking and fintech, trust is not optional. The third dilemma is something that happens slowly and quietly: automation drift. It starts with, this system just helps prioritize, then becomes, we rarely override it. Then eventually, we trust the model. At that point, humans are still in the loop, but mostly as validators, not decision makers. The ethical risk here isn't laziness, it's over-reliance. When systems are consistently right, people stop questioning them. And when something goes wrong, it's often not because the system failed, but because nobody noticed it drifting out of balance. Ethical governance isn't about stopping automation. It's about maintaining human judgment where it actually matters. And the final ethical dilemma is accountability never disappears. Here's the most important point in this session. AI doesn't carry accountability. Banks and fintech do. No regulator accepts the model decided. No customer accepts the system flagged you. Accountability always sits with the institution or organization, the governance framework, and ultimately the people running it. This means ethical AI in banking and fintech is not a data science problem. It's a governance problem. It requires clear ownership, documented decision logic, monitoring and review, escalation paths, and the courage to slow things down when risk appears. So the ethical question isn't, should banks or fintech use AI? They already are using it. The real question is, how do banks use AI without surrendering judgment, responsibility, and trust? Ethical banking isn't about avoiding technology. It's about controlled adoption, transparent decision-making, and remembering that efficiency never outweighs accountability. So in short, don't think of ethical AI as restricting innovation. It's not. It's about adoption with a focus on robust governance. This means recognizing the significant compliance and legal obligations that banks and fintech have, and applying the same rigorous approach of systems governance you would apply to any other technology. Just because AI is a technology game changer doesn't mean that the regulated nature of banks and fintechs suddenly becomes lighter. If anything, it requires the same focus and dedication that already exists in every bank and fintech towards ensuring strong governance practices with AI. Before you go, let me add one final thought. Everything we've discussed today highlights how modern banking and fintech increasingly rewards judgment, context, and practical understanding, not just tools or credentials. That's the thinking behind the Banking and Finance Guild. The Banking and Finance Guild is a professional capability platform for banking and fintech professionals, combining applied learning, role-aligned certification, and practical tools used in day-to-day work. If you'd like to see how it works or what's coming next, you'll find the link below. Thanks for joining me in this insights session, and make sure to like this video and subscribe to the channel so you can keep up to date with the latest insights in banking and fintech.